Hey there, it's Mark Yagi coming to you with a kind of an analysis of Apple. And Apple is on a breakout right now. You probably saw my video from last week that said, look, it's about to break out at 199, 200. And now the stock hit 220. It's bounced back a little bit. It's sticking right around 214 right now. So we're going to do the analysis there. The first thing I want to show you is when a stock breaks out, you can see there is this little area right in here that shows you look, there's a resistance line there. If you could draw an imaginary line, there's resistance. And when it breaks through on volume, that's what you're looking for, is that volume breakout right there. And we got that. And notice how it came back, of course, because there's some profit taking going on there. And there's also been a lot of people that have been buying Apple for a long time, and they're really happy to take out 220, 215, something like that. So what it does is it pulls back, and then new buyers come in. You know, you're sitting on your computer and all of a sudden you get a thing that says Apple's up, 20% or 10% in 2 days. You want to get involved. Like, what's going on with Apple? Why is it going up? I want to get involved. I like their phones, that kind of thing. And so you start to get into it. And so do other people. And they rush into that stock. And that's why the stock doesn't drop so much. It drops a little bit while the old profit takers get out of the stock, but they sell it to the new people that are looking for the new move. So now there's a new move afoot from 200 to maybe 240 or 230 or whatever it is. And so you can do really well if you find a breakout on the chart. And there's lots of breakouts going on right now. I've made a few videos lately about them over the last couple of weeks. You could still get involved in some of those breakouts because we have what I call a green market. Now, a green market is a market that is got the possibility or the probability of the markets going up. 70% of a stock's direction comes from the direction of the market. And so if the market's going up, chances are you got a 70% chance that your stock is going up if you got a decent one, right? Doesn't always happen, of course, but that's a probability. Then you get a breakout. That's another probability. When you put those two together, you find the spot on the chart, the right stock, you've done your analysis, you've broken it down, and now you can get involved in the stock. And you want to get involved in an upwardly trending stock. You like the stock to go from lower left to upper right. That's the kind of direction that you like in a stock. You'd like to do it on increasing volume. And if you notice down here where the stock is breaking out, look at how much volume there is at the bottom compared to over the last several months. It's been fairly low. There's all of a sudden now we got a bunch of days in a row on the stock breaking out. Okay, so now I'm going to shift to covered calls because now we've found the stock, we found the breakout point, we've got the volume, we have a breakout underway. Do we get involved here? Hi, it's Mark. I'm breaking in here to let you know that if you want to become a better trader, if you want to learn how to spot the breakouts before they happen, if you want to crank up your trading power, then I have something that you're going to want to hear about. On January 4th, I told you about NVIDIA and SMCI and where I thought that they would break out. Over the next few days, both of those broke out to more than double or triple. Were you in them? On June 6th, I told you that Apple was about to break out around 200. It jumped to 220 4 days later. Were you in it? I can show you how to find these breakouts before they happen. I always say it only takes one stock to change your life. So let's see if we can find these stocks together. Now, starting in a few days, I will be hosting a program called the Trade Like a Pro Accelerator. It's my swing trading course plus 4 weeks of live workshops and mentorship. And right now, I have an insane price on the program because I want to get lots of people and lots of feedback on it. So if you're interested in joining me in a group of sophisticated traders, click on the link below to learn more. Or you can even just subscribe and get a free mini course if you aren't sure if you want to attend. Click on the link below. Now, back to the video. That is the question. If we do, can we create some income from it? So you go to an option chain. If you're an option seller or an option trader, you know what I'm talking about, an option chain. I have courses that can help you figure this out, but that's okay. If you don't have time to take the course, I still have this way of showing you the option chain. Now there's option people that are buying the option at 645. We're going to sell the option at 635. So we're looking at the stock at around 213.96. And then what we want to do is we want to turn around and sell those 215s right just out of the money, tiny bit, and get $6.35 for it. And these are going to go out about 34 days. They expire in about 4 weeks. And so they're 34 days out. Let's take a look at how that works. So we buy the stock, we sell the call against it. Let me show you the numbers. Here are the numbers. Okay, so we're buying the stock at $213.96. We sell the call for $635, like I just showed you. We have a strike price of $215. I showed you that on the option chain, right? And now we're going to do 500 shares because that's $100,000, $103,000 investment. Okay, so you take $100,000, you invest it, you bring your basis down to $207.61, and then you're getting that $6.35 in juice. Your percentage is roughly around 3%. And so if you annualize that, if you could do this over and over again, let's call it like 12 times this year, 34 days is, roughly a month, right? And so if you do 12 months roughly, then you're going to end up making an annualized return of 33%. And so 33% is a pretty good amount of money on $100,000 because you're talking about making about $32,000, $33,000 on a $100,000 investment. That's how covered calls can work. This is a pretty easy one. You buy it, you forget it for a month, and you hope it's over your $215 strike price. If it's at a penny above $215, you pocket the whole $33,000 on that covered call. Then you can do it again, or you can roll it. You can do lots of different things. So that's how you do a covered call on Apple when Apple is breaking out and Apple is the right stock and it's at the right spot on the chart. All right, I hope that helped. I'd love to see you at that course that I just mentioned. And if not, I'll see you on the next video. Take care.